Today we're going to be talking about private equity and what it is private equity firms do to make money. Private equity company is a firm that has established themselves to make a profit by investing in private companies. Why would private firms want to work with a private equity company? And there's many reasons for this. Three of them, which I can think of right at the top of my head, is number one, a business owner would like to retire and he doesn't want to take his company public, or he doesn't want to sell the entire company to another buyer. Number two would be a business that does not see the future as something that is guaranteed, and therefore they would like to reduce their stake in the firm and maybe grab some cash and put it into their personal fund just to make sure that they're well off for the future. And then a third reason, and possibly one of the more common ones, is a private firm would like to raise capital. Perhaps he's doing very well in what he's doing, and he's thinking, I'm going to raise some capital because I'm going to take my business from 1 store to 10 stores. So, an example of this, let's say Joe has an ice cream shop, and his ice cream shop is doing very well. Joe says to himself, well, let me do this. Let me go to friends and family and see what kind of capital I can raise from them. Starts realizing his friends and family are not the richest people in the world, So he's going to go to his bank. His banker is a good friend to him, and he'll say, hey, listen, Mr. Banker, look at my profits that I've made. I think I can open, second store, third store, and a 10th store and make 10 times the money I'm making today. Well, his banker is very regulated in his bank by the government, and they're saying, we don't lend based on future potential. We lend on prior cash flow. So the banker's going to say, listen, for the last 3 years you've been making $150,000 a year. We could lend you money on what $150,000 can pay. We don't care about how much capital you have into the business. They're going to lend you basically on the net earnings at the end of the year. And future potential is generally not considered, or considered very little. So let's go back. The first thing I mentioned is private equity firms are looking to invest in private companies. They're looking for companies that have very high growth, their industries of high growth, and they've got maybe good competitive advantages, barriers to entry that other companies don't have, And the way that they make money, number one, is once they own the stock of the private company, of course, the yearly income that's coming in is coming into these private equity firms. But generally, private equity firms don't buy assets or companies to own for the next 50 years. Generally, the way that they make money, and they make money very well, is they're going to buy out a company like Joe's Ice Cream Shop. Okay, they're going to buy out 40, 50, 60% of the equity of the stock. They're going to take their capital and they're going to grab their management and they're going to help him build the business. So they're going to take the store from owning 1 ice cream shop to owning 2 and 3 and then 4 and then 10. At that point, they're going to say, we're done. We've gone as far as we think we can take this business. Let us either take the company public, or we're going to sell it out to another larger private equity firm. There are private equity firms that deal in companies that are from 10 million to 25 million. There are private equity firms that deal from 25 million to 100 million. And then there are other companies that obviously go from 100 million to the sky's the limit. So these private equity firms are doing this, and they're making very good money because they're investing in the future where banks don't work in, and they're taking risks, calculated risks, on what they think they could do with their capital. So in essence, they're not only lending money to the business, to the firm, but they're lending the money to the firm with a stake in the equity, in the stock. So if the company does grow, they also get they also join in on that growth and that capital that's being made. If you have any friends that are interested in raising capital, as always, I recommend that you have them reach out to us. We know several private equity firms. We'd be interested in setting you guys up with some conversations. Generally, these businesses have to be in business, obviously, for a couple of years. They have to show profits. So if you know anyone that's looking to raise capital, is looking to retire, have them reach out to us. We'd like to, perhaps have you in an interview. Don't forget, tag your friends, and thank you for joining in.